The Bitcoin halving, much publicized, much spoken about, and much confusion. It actually refers to the reward that Bitcoin miners get when they mine a new block. All very kind of esoteric, concepts that are very specific to blockchain. But basically, the miners are like the worker bees of the blockchain network itself. They get paid in freshly minted bitcoins for the work that they do, organizing all the different, all the information within each of the blocks, if that makes sense. And so originally it started off where they would earn 50 bitcoin per block that they mined. And inbuilt within the blockchain system itself is this automatic halving of reward for every 210,000 blocks, I think it is, that they mine. So it's gone from 50 to 25, 12.5, and now it's 6.25 with the most recent halving. So a bit of an esoteric concept, but the point of it is to create Bitcoin as a deflationary asset rather than inflationary, as we know with fiat currency.
I know it was such a huge deal because it happens every few years, and it was like any sort of crypto publication you went on, having everything was leading up to it. It happened on May 12th. What's happened since in the last week and a half or so?
Well, kind of as predicted, the hash rate, or the rate at which the blocks are being produced by the miners, has reduced, and that's gone down by, I believe, 23%. In recent weeks, in the time since, and with that, then we're seeing the rewards that the miners are getting dropping from 12 million a day to about 8 million a day. That's in US dollar. So we can clearly see the impact in the short term in terms of the profitability and the length of and the amount of miners that are willing to operate on the Bitcoin network. But this was all well flagged beforehand, so I don't think this is really catching anybody by surprise. What we would anticipate then is, as the older technologies, the older mining rigs are kind of put out to pasture, the new technology that's coming in to kind of rebalance that profitability for the miners as they continue about their business.
I know it's like definitely in the current climate, it's so hard to kind of look ahead too far. But I mean, like, what do you see happening in the next few months, maybe 3 to 6 months?
Well, for Bitcoin in particular, what's interesting, just before the halving happened on our exchange and exchanges worldwide, we saw a drop in price. It had been hovering in and around that magical 10,000 US dollar number. And on the Sunday trading before the happening on the Tuesday, it dropped on our exchange from 15 down to $13,500, and it kind of languished in and around that kind of price point for a time period before the recovery began. In the week after, and I believe now it's about 14 and a half. It hit to about 15,000, and now it's about 14 and a half Australian dollar on our exchange today. And you can kind of see that as the ripple effect of that halving, as the price readjusts according to, as I say, that reduced hash rate, and it tries to find its natural equilibrium, a natural price point. But I think if you look historically, this is kind of in keeping with what we've seen in prior halvings. But overall, if you look at over a timeline, the trajectory has been in an upward position for Bitcoin, for BTC, over the last 10 years. That's not to say that markets aren't affected and impacted, and prices can go down as well as up. And I'm certainly not a financial advisor, but I think it's worth looking at if you look at the historical trends. More broadly, where Bitcoin it tends to lead the altcoins in its wake, and we receive that on our exchange. When Bitcoin goes through particularly volatile movements, we see increased activity across other altcoins. But just in terms of what else is of significance, I know with Ethereum, we're looking to go to 2.0 sometime around July. Last I saw, that's going to be really interesting as it goes into the proof of stake and transitioning away into that new consensus mechanism, or new for the 2.0. And that's going to be really interesting to see how trading plays out and how that impacts on price and market expectations. But I think what we're going to see increasingly, and not just for Bitcoin, but for the market as a whole over the next 2 to 3 years, is this growth in the altcoin. I would, if you want to kind of use that parlance, particularly as the use cases grow out, not just in Australia, but worldwide. I know that there's an awful lot more innovation and technology coming through, particularly from Australia, and I think that's really going to feed into the growth in that altcoin market. As well as that, if you look at where regulation and legislation is going worldwide, we're also going to see the impacts of that coming through to the Australian market. It's an incredibly exciting space to be in.
Just in terms of a COVID-related question for you. Obviously, every industry has been affected in some way. I mean, what about the crypto side of things? I mean, what's been the impact?
Well, I think what's significant with digital assets in general is that they are global by their very nature. So one particular instance, one particular geography doesn't necessarily impact it, and then even something like this has got in a sense almost minimal impact on digital assets per se, simply because of the very fluid nature of their structure. What I think we have seen kind of on a more grassroots level is an increased interest in digital assets as people are kind of more open through this period of time, more open to exploring new ways both of living, working, and different forms of financial structures too. So I think, different technologies. So I think that's probably what I've seen more of, is an increased interest, an increased exploration of the possibilities that are there. Its decentralized nature, I suppose, also is very in keeping with the times that we're in as we live and operate in a newly decentralized world.